Good morning, and thanks for joining us on today's episode of Crypto Daily. I'm your host, John, and I'm here with my co-host, Emily.
Morning, John. It's looking like a big day in the crypto space, especially when it comes to the fight against financial crime. We've got a major milestone to discuss, and it involves some big players.
That's right. The Tron-led T3 Financial Crime Fighting Unit just hit a major milestone in frozen USDT. For those who might not be familiar, can you walk us through what this unit is and how it works?
The T3 Financial Crime Fighting Unit is a collaboration between the Tron blockchain's stablecoin issuer Tether and blockchain intelligence company TRM Labs. Essentially, they're working together to identify and disrupt illicit activity on the Tron network, particularly when it comes to the use of Tether's USDT stablecoin.
That's right, and it seems like they're having a significant impact. Freezing $100 million in USDT is no small feat. What kind of bad actors are they targeting with this effort?
From what we've seen, the T3 Financial Crime Fighting Unit is casting a wide net. They're going after everything from scammers and phishing schemes to more sophisticated operations like money laundering and terrorist financing.
It's great to see the crypto industry taking proactive steps to address these issues. We've talked before about the need for better regulation and oversight, but it's also important to recognize the efforts being made by companies like Tron, Tether, and TRM Labs to police themselves and protect their users.
Absolutely, and this milestone should give us some hope that these efforts are paying off. Of course, there's still much work to be done, but it's a step in the right direction. We'll be exploring this theme further throughout the episode, including some of the challenges and complexities involved in fighting financial crime in the crypto space.
And we'll also be taking a closer look at the market implications of this news. Tether's USDT is one of the most widely used stablecoins out there, so any efforts to crack down on illicit activity could have a ripple effect throughout the market.
That's right, and we'll be discussing some of the other big market-moving stories of the day, including some major developments in the world of decentralized finance. It's shaping up to be a fascinating episode, so be sure to stick with us.
And as always, we want to hear from you. If you have any questions or topics you'd like to discuss, feel free to reach out to us on social media or through our website. We'll be back with more on the T3 Financial Crime Fighting Unit and the latest crypto news after this break.
As we touched on earlier, the market's reaction to the U.S. presidential election has been a major talking point in the crypto space. One key observation is the dollar's surge since November, with the DXY index up over 3%. Interestingly, this trend bears a striking resemblance to the dollar's trajectory after Donald Trump's first presidential election in 2016.
That's right. Analyst Van Straten has pointed out this correlation, suggesting that the dollar's post-election pattern may be tracking a similar pattern to Trump's first term. If we look at the numbers, both the dollar and Bitcoin experienced significant surges following the election. This raises questions about the potential implications for the crypto market moving forward.
Building on what we discussed earlier about the interplay between the dollar and cryptocurrency, it's clear that a strong dollar can have a significant impact on Bitcoin's price. Given Trump's policies and the Fed's expected actions, it's likely that the dollar will continue to show strength. This in turn could influence investor sentiment and potentially lead to a shift in the crypto market.
Speaking of investor sentiment, it's worth noting that the current rally in the dollar is largely driven by expectations of higher interest rates and a more hawkish monetary policy. This could lead to a decrease in investor appetite for riskier assets, including cryptocurrency. However, as we've seen in the past, Bitcoin has a tendency to defy traditional market trends, so it's difficult to predict exactly how it will react.
Another important factor to consider is the potential for increased volatility in the crypto market. As the dollar continues to strengthen, we may see a corresponding increase in price fluctuations for Bitcoin and other cryptocurrencies. This could create opportunities for traders and investors who are able to navigate these fluctuations effectively.
Ultimately, the key takeaway from this trend is that the crypto market is heavily influenced by broader economic and political factors. As we move forward, it's essential to keep a close eye on developments in the traditional markets and consider how they may impact the crypto space. By doing so, investors and traders can make more informed decisions and adapt to changing market conditions.
Looking ahead, it will be interesting to see how the dollar's trajectory continues to unfold and how this affects the crypto market. As always, we'll be keeping a close eye on these developments and providing updates as more information becomes available.
In the meantime, we'd love to hear from our listeners. What are your thoughts on the dollar's surge and its potential impact on the crypto market? Share your insights with us on social media, and we may feature them in a future episode.
I think we left off on an interesting note earlier talking about the potential for alternative cryptocurrencies to lead the charge in the new year. It seems like XRP is already taking that idea and running with it.
That's right. We're seeing a massive surge in XRP with an 11% increase leading the pack among major cryptocurrencies. It's not entirely surprising given the trends we've been observing in South Korean trading volumes.
Building on what we discussed earlier about the importance of regional markets, it seems like South Korea is once again proving itself to be a key player in the world of cryptocurrency. That $1.3 billion worth of trading volumes on Upbit is certainly a significant factor in XRP's recent growth.
Absolutely. As we noted in our previous analysis, unusually high trading volumes for XRP on South Korean exchanges have historically acted as a harbinger for price movements. It's clear that the market is paying attention to these trends and reacting accordingly.
Speaking of market reactions, it's worth noting that this surge in XRP is happening alongside a broader bullish trend in the cryptocurrency market. Bitcoin in particular is starting the new year off strong. The fact that XRP, the cryptocurrency, was already worth about $41 billion when it fell like almost $50 billion just over 2 years ago.
That's right. Bitcoin's recent price movements are certainly contributing to the overall sense of optimism in the market. It's interesting to see how XRP's growth is both reflecting and influencing the broader market trends.
One thing to keep an eye on is how this growth in XRP will affect its position in the market. Could we see a shift in the balance of power among major cryptocurrencies? Or is this simply a short-term surge?
It's difficult to say for certain, but what's clear is that XRP's performance is being driven by some very real market factors. As we continue to monitor the situation, it'll be interesting to see how the market responds to these changes and whether XRP can sustain its current momentum.
Of course, we'll be keeping a close eye on the situation and providing updates as more information becomes available. For now, it's clear that XRP is one to watch in the new year.
And as we move forward, it'll be important to keep the broader market context in mind. With Bitcoin starting the year off strong and other cryptocurrencies showing signs of growth, it's shaping up to be an exciting year for cryptocurrency enthusiasts.
As we were just discussing, the integration of cryptocurrencies into everyday transactions has been gaining momentum lately. We touched on some of the recent developments in the space, from more merchants accepting Bitcoin to new platforms emerging to facilitate these payments.
That's right. And now another major player is joining the fray. KuCoin has just announced the launch of its point-of-sale system, KuCoin Pay, which will allow customers to pay merchants directly from their accounts at the exchange.
That's huge news. For those who might not be familiar, KuCoin is one of the larger cryptocurrency exchanges out there, and this move is a significant step forward in terms of mainstream adoption. With KuCoin Pay, customers will be able to use 54 different cryptocurrencies, including major players like Bitcoin, Ether, USDT, and USDC.
Exactly. And what's interesting here is that KuCoin is essentially cutting out the middleman. By allowing customers to pay directly from their exchange accounts, they're streamlining the process and making it more convenient for both parties involved.
Building on what we discussed earlier about the importance of user experience in driving adoption, this move by KuCoin seems like a smart play. By making it easier for people to use their cryptocurrencies in everyday transactions, they're helping to bridge the gap between the crypto world and the traditional financial system. And so,
speaking of user experience, it's also worth noting that KuCoin Pay will be using QR code technology to facilitate these transactions. This is something we've seen other crypto payment providers do as well, and it's a great example of how the industry is leveraging existing technologies to make crypto more accessible.
Absolutely, and as we continue to see more developments like this, it's clear that the lines between the crypto world and traditional finance are becoming increasingly blurred. It'll be interesting to see how this plays out in the long term, but for now, it's certainly an exciting time for the industry.
Definitely, and we'll be keeping a close eye on this story as it continues to unfold. In the meantime, we'd love to hear from our listeners. Have you used crypto to make a purchase recently? What was your experience like? Let us know on social media using the hashtag #SeeCryptoPayments.
We've seen a lot of movement in the market today, but one story that caught my eye is Tether's market value taking its sharpest decline since the FTX crash. What's behind this drop, and should investors be concerned?
It all boils down to the markets in crypto assets, or MECA regulation, kicking in. As a result, several European exchanges and even Coinbase have removed USDT from their platforms due to compliance concerns. This has led to a 1.1% decline in Tether's market cap this week.
That's quite a significant drop, but we should also consider the broader context. We discussed earlier how the global regulatory landscape is becoming increasingly complex, and it seems like stablecoins are at the forefront of this scrutiny. Do you think this decline is an isolated incident, or is it a sign of things to come?
I think it's a bit of both, to be honest. On one hand, the delisting of USDT has had a limited impact on its dominance and the broader market, which is reassuring. On the other hand, this incident highlights the challenges that stablecoins and other crypto stacks face in navigating the ever-changing regulatory environment.
That's a great point. We've seen time and time again how regulatory uncertainty can affect market sentiment. But it's also worth noting that Tether has been in the spotlight before, and it has always managed to bounce back. What are your thoughts on the long-term implications of this decline?
I think Tether will likely recover from this dip, but the real question is how the stablecoin market as a whole will adapt to the new regulatory landscape. We might see a shift towards more compliance-faked stablecoins or even the emergence of new players that are better equipped to navigate these challenges.
That's a great point. As we wrap up today's episode, what are the key takeaways that our listeners should keep in mind?
Well, first and foremost, the regulatory environment is becoming increasingly complex and investors need to stay vigilant. Secondly, while Tether's decline is significant, it's not a reason to panic, and the stablecoin market will likely continue to evolve. Finally, as we look ahead to the rest of the week, it's essential to keep an eye on the broader market trends and how they might be affected by these regulatory changes.
And on that note, let's take a look at the market outlook for the rest of the week. What can our listeners expect?
We're expecting a bit of a mixed bag, to be honest. While some assets might continue to feel the pressure from regulatory uncertainty, others might see a bounce back as investors look for opportunities in this new landscape. As always, it's essential to stay informed and adapt to the changing market conditions.
Well, that's all the time we have for today. Thank you for tuning in to our daily crypto news podcast. We'll be back tomorrow with more updates and analysis from the world of cryptocurrency.
And don't forget to follow us on social media for the latest news and updates from the world of crypto.
Until next time, stay informed and stay health the curve.